Hi, my name's John Cash. I'm the CEO and chairman of the board of URG. We are a publicly traded uranium developing company working in Wyoming, utilizing the in situ recovery technology. We currently have our Lost Creek mine up and running, and we've made the announcement that we're building out our Shirley Basin project, and we're making strides toward that right now with drilling and installation of the first monitor well ring. It's an exciting time to be in the space, and we're here today to talk about nuclear and URG.
John, good to see you, sir. I think we've both been on the road recently. I've been talking about you and the space in Quebec on the uranium panel. Lots of questions need to be answered, and I think you might be able to help me today because you've also been on the road. Where have you been?
Yeah, a little bit road weary. I'm ready for a little bit of a break, but no, it's been really good. It's been a very productive week. Sunday, Monday, Tuesday was down in Atlanta at the World Nuclear Fuel Markets. It was their 50th anniversary meeting, so it was incredibly well attended. In fact, they said it was the best attendance they'd ever had. And I wasn't sure what the attitudes were going to be, what the mood was going to be going into that meeting, but I've got to say it was very positive across the board. We had the opportunity to meet with numerous nuclear utilities, fuel buyers, investors, other mining companies, and everyone was very excited about where nuclear is at right now and where it's headed. So, just a great feel, great vibe there in Atlanta over the last few days.
Yeah, like I said, I was at a dinner, I think, Friday ago, and I was sitting with some fund managers from Rothschild, and they too very much leaning in about uranium and copper in terms of the green complex. So I think people are excited to understand how this thing rolls out and moves forward. But as a producer, I guess you're standout in that crowd at the moment because there's not a lot coming out from the West. And what was the questioning coming from utilities about, well, where is it all going to come from and when?
Yeah, certainly that's the case. Right now, the utilities, many of them are telling us that they're going to need more pounds in the not too distant future. They'll be coming out with additional RFPs. Typically the summertime's a little bit quiet, so we don't expect RFPs in July, August. But as we roll into this fall, a number of them are telling us we're going to be back in the market looking for pounds. A number of them expressed interest in U.S. or Western produced pounds. They're trying to continue to move toward diversification. They're also looking for mining companies that have got a history of production. One of the things that was really interesting is we didn't hear any utility say we are demanding base price escalated contracts. Pretty much across the board, everyone said, yeah, we'll accept collars. We heard some fairly high numbers and even a couple of cases where they said we would even consider no ceilings. And so a little bit of shock by that, but certainly we're glad to participate in contracts without a ceiling that are related to the spot market. So I think it's going to be an exciting fall as we begin to respond to those RFPs. At URG, with production going on, revenue beginning to flow in, it's an exciting time, and we're in a really good spot. We're not in a place where we're forced to go out and contract because we need revenue. We've already got some great revenue locked in with the 6 contracts we have in place. So we're in the enviable position of being able to look for those terms that we really feel are best for the company. The terms as far as pricing, length of contract, diversity of contracts, quantities and time frames. We've got the luxury to sift through those, sort through those, and respond accordingly. So I think we're sitting in a really good spot.
Right. So obviously a lot of variables when it comes to term contracting, but it feels like maybe utilities are resigned or maybe accepting of triple-digit numbers as part of that. That's a significant change.
It is. And, I wasn't sure what the attitudes were going to be because right now uranium prices are fairly high. I think they've got some considerable room to move. Conversion prices and enrichment are also fairly high priced right now. So I was concerned the mood from the utilities may be a bit sour, but that wasn't the case at all because of the Inflation Reduction Act and the tax credits that are being provided there. And because of other new sources of customers that they're enjoying, specifically data centers that are paying a premium right now for electric prices, the utilities are in great shape. They're in better shape than they've been in a long time. And so, they were just on cloud nine. One of the things that just was fascinating is I keep reading about data centers and how that's going to be an additional source of energy demand going forward. But we had a couple of utilities that were very explicit and said they are already seeing tremendous benefit from data centers that they're supplying energy to. They're putting them between the bus bar and the nuclear power plant. And the demand for electricity from those data centers is immense, absolutely immense. And that demand is already here today. As I was kind of thinking was hypothetical, something in the future that we would see grow here in the not too distant future, but it's already here. And the utilities are expecting that to grow significantly. And the reason why the data centers, AI, they're wanting to get close to those nuclear power plants is because it is clean energy with a strong baseload characteristic. And they want those two things, and they can get that electricity at a reasonable price because they're on the nuclear power plant side of the bus bar, so they're not paying distribution cost. So it's a win-win. The data centers are getting cheaper electricity, and the nuclear power plants are getting a premium for those prices. So the demand is real. It's now, and I think it's going to continue to expand fairly dramatically in the future, not just for the conventional major reactors that are pre-existing, but I think we're going to continue to see more and more demand for the small modular reactors for data centers and other more remote applications. So full steam ahead right now for the nuclear industry.
Well, it's nice to see the transfer of wealth from the tech space back into natural resources in whatever form, And for them, it's a rounding error. It really is. So utilities in a good place, margins improving, and I think when money's flying around, perhaps decision making gets a little bit easier, as I think you just commented on with regards to some of these term contracts. So good news there. Just in terms of that, just want to sort of be clear about what it does for utilities and therefore the knock-on effect for the entire nuclear complex, including uranium enriched and otherwise. Is that kind of higher premium, higher margin, baseload energy? We see what that can do for us in terms of the data centers and others, presumably, who'll start looking in for this consistency. Is what precisely they want the consistency which what renewables can't deliver, or is it as well? And are they okay with the kind of green credentials of nuclear?
Yeah, I think all of the above. Certainly those data centers, they can't be, if they want carbon-free energy, which they do, they can't be reliant on renewables because right now we don't have any backup that can support it when the wind doesn't blow or when the sun doesn't shine. And so they are looking for that strong baseload because they have to stay up and running. It's really beneficial to the nuclear power plants too. As you've often heard, nuclear power plants like to run on an even keel. They don't like the demand to be up and down where they have to continue to swing the power output up and down. They like a nice, even, steady keel. It's better for the reactor. It's easier to operate. It actually extends the life of the reactor. So having a major demand right there by the power plant that is even and steady, that helps smooth out that production output from the nuclear power plants. So they love it. Higher profit margins, easier to operate. It's a win-win for everybody involved.
I can see why everyone was in a good mood. Let's talk about some of the other miners there as well, because, not everyone's in production, but they're still going to have conversations and give certainty to their bankers and funders, etc. Did you speak to or did you hear from the other players? Yeah, a little bit.
Our conversations were really directed toward fuel buyers, but certainly had a chance to talk with a few other mining companies. And yeah, there's just so few mining companies out there right now in the uranium space to begin with. And only a handful of those are moving toward production aggressively, just literally a handful around the world. So there is that supply gap. It's becoming increasingly apparent to me that it's going to take longer for that supply gap to be filled with the miners catching up with that demand. It just ramp up these days is not easy. I'm so thankful that UR Energy, we are well into ramp up right now. A lot of the challenges that we faced are behind us now in the rearview mirror. I feel a bit sorry for some of my peers that are just now getting started. So yeah, it's going to be a challenge for the miners to catch up with that demand. And, at least a couple of the miners that are trying to restart, They're restarting after the coming off the heels of technical challenges. So they're not only going to face labor shortages, rig problems, supply chain, inflation, they're also trying to overcome technical challenges too. So, yeah, it'll be interesting. I think over the next 6 months to a year, I think things are going to really begin to come into focus what that supply chain for uranium is going to be looking like going forward. But it's not easy. If it was easy, everybody would do it. And we're the few, we're the proud in the uranium mining industry, and we've got our work cut out for us, no doubt about that, because the world really is turning more and more to nuclear, and we expect to see significant growth in the electron generation from nuclear utilities. And it'll be our responsibility to fill that supply gap over the coming years.
For sure. This is where the rubber hits the road, and
Yeah.
you know, and talk is cheap. It's now people have been talking about it have actually got to deliver, because we need all of the above. We need everyone to work. I guess as an investor, I perhaps need to kind of reset or realign my expectations on the timing of that. And whilst that is happening, as an investor, I'm probably going to be delighted to the upside, because it's going to affect price. There's going to be less product around for utilities to kind of pick up, for the enrichment guys to pick up. So that's great for me. But the West as a whole, we talked about this at the conference this week, which is this expectation around a kind of bifurcated pricing environment, as a lot of product from Kazakhstan, from Russia, and any of their projects heads east. There's not a lot of availability. Geopolitics plays a big part of this. We've seen what's happening in Niger. We have not seen people sharpening their pencils when it goes to money flowing upstream. A lot of it flowing downstream. So what are your views on what that could do to the pricing environment, say, this year and next?
Yeah, it's a really complicated story, and it involves geopolitics and production capacity relationships. Let me throw in something else that's another layer on top of this. Is something that we're watching develop is the European Union just a few weeks ago passed an ESG regulation, and that's going to trickle down from those European utilities to the supply chain. We're still trying to figure out exactly what that means, but I suspect it means that there will be some guidance, some restrictions perhaps on CO2 emissions. And so we're looking at that very carefully. But yeah, I expect to see more and more of a bifurcated market as people try to move more and more into Western supply instead of Eastern supply. There's more risk associated with Eastern supply. There's actually some trouble with their ramp up due to supply chain issues with Eastern supply. So we've got that going for us here in the West. One thing I would comment that's specific to UR Energy when it comes to CO2 emissions, we do have a couple of customers already who are keenly interested in our CO2 emissions, and one of which actually has a program where they have an internal policy to reach a certain amount of CO2 emissions per pound of U3O8 produced. One of the reasons why they are seeking contracts with us and are involved with us is because of the process we use. It's in situ. So by its very nature, it uses less energy and less CO2 emissions than a lot of the conventional miners. So that helps lower our CO2 emissions. But we've also been studying lately that we actually sequester a little bit of CO2 as part of our mining process, because we inject CO2 gas, which is evolved from the oil and gas industry and would have been released to the atmosphere. But instead, we use that as part of our process. And the geologic formation we work in sequesters a part of that. So that further drives down our CO2 emissions. And we believe we're probably one of the lowest CO2 emitters of any of the uranium producers. And why is that important? Because European utilities especially, they want lower CO2 emissions, and they're serious about it. It's not just something they discuss. They literally have policy, corporate policy that says we will move toward those supply chains. And so we believe we're going to be seeing a little bit higher pricing because of that. And then you layer in the geopolitics and the need for diversification. I think we're sitting in a really good place here in the U.S.
Yeah, I'm kind of, absolutely. And I think that kind of helps with the kind of green qualifications. I'm sort of intrigued to see what nuclear and derivatives, uranium do to kind of continue to enhance those credentials, quite frankly. So all good stuff. The other thing I noticed that there's some commentary around you with regards to what the knock-on effects as we start to understand what the Russian ban is doing to the market, can do to the market, and more importantly, can do for companies like you in this market, as again, coming back to that point, one of the very few producers in the West. So are you starting to sort of get a sense of that now?
A little bit, but I think we've got quite a ways to go. Not too long ago, the Department of Energy put out their guidance on how they would utilize the waiver process. Despite that guidance, I think there's still a lot that's not known about how they'll apply and how they may continue to cinch down on those waivers over time. So I think that's an evolution that we're going to need to continue to watch. But absolutely, it adds more uncertainty into the market. That's beneficial to us because it puts pressure on the price going forward. Somewhat related to that is in Congress right now, there's legislation looking at sanctioning Rosatom, which is the Russian uranium mining company, and they're obviously involved in a lot of other things in the nuclear space beyond just uranium mining. But if that happens and sanctions are put on Rosatom, a lot is unknown about what that legislation may look like if it's passed, but that could begin to trickle into things beyond conversion and enrichment that comes out of Russia. That could begin to trickle into Rosatom's mines around the world, including within Kazakhstan. And that could have a much greater impact than even the Russian ban on uranium imports or LEU imports into the U.S. So, yeah, just a lot of uncertainty right now. Certainly, there is a lot of interest in Washington, D.C. on both sides of the aisle to bring Russia in line with society and where they should be. And they're looking to apply pressure wherever they can. So we don't know if this legislation will move forward or not, but certainly it's a tool that Congress is actively looking at to deploy to try to bring Russia in line. So we'll see.
We shall see. And I think so. One final point, if I may, which was, again, so some commentary, a reminder, I suppose a probably better way of putting it, in terms of the length of time it's going to take for some of these companies to actually get permission to get into production, permission to build mines, in some cases permission to even mine. It's a long, drawn-out process, getting longer and longer. We're talking sort of 10 to 20 years in the making. So even at the front end of this sector that we happen to love and work in, new entrants it's going to be a long time before they're able to contribute. Even existing companies, right? And I was with, like I say, a whole bunch of them in Quebec this week, and up in Canada. The Canadian boys and girls, have got a long ways to go. So I think the US is going to have to be, I guess, masters of their own destiny in that sense. Do you think, given that, because of the history of production in the United States, do you think that the US government is actually going to start maybe making some more money available upstream rather than all of the kind of downstream conversion technologies? Can you see that happening?
Yeah, right now I think most of the money that's available from the U.S. government will be dedicated toward conversion and probably mostly toward enrichment as a part of the HALEU and the LEU RFPs that the HALEU is already in process. The LEU will be occurring here in the near term. But that money, those regulations or laws that were passed to free up that money, it does say there's a strong preference toward domestically produced uranium. So we do expect to see a trickle down. We do expect in the coming months to hear more from converters and enrichers looking for U.S. supply to satisfy the requirements of that law or the guidelines of that law. So I think there is some line of sight on some funding that will trickle down to us. But I do want to go back real quick. You mentioned permitting and just comment on that. You're spot on. Permitting a uranium mine anywhere in the world is quite challenging, but especially in the Western world. One of the advantages we have with UR Energy is we're up and running now at Lost Creek. We have the permits we need for Lost Creek. We've got Shirley Basin that we're building out is fully permitted, so we're good there. Between those two facilities, that'll take us up to a licensed capacity of 2.2 million pounds per year. But what I want to comment on is around Lost Creek in particular, We have 35,000 acres right there. Plus we have other projects in that immediate vicinity, many of which are within pipeline distance. Another couple that are within 10 miles or so. So we could build a satellite and easily truck material in. The benefit of that is we can license and permit those as satellites to the existing Lost Creek facility. And when we do that, we're not looking at a 5, 10, 15-year licensing process. We're probably looking at a 3 or a 4-year process to be able to license those, and then perhaps another 6 months to a year to bring them into production. So that affords us the ability to continue to bring in development projects into the story much more rapidly for UR Energy and in Wyoming, because we're in agreement state, than in a lot of other jurisdictions around the world. So we're very happy to be in Wyoming, very happy to be in the Great Divide Basin.
It's exciting times, John, for sure. As you say, with data centers, with SMRs, and extensions to existing reactors, new builds happening out there. The demand is definitely there. Supply struggling to catch up. So in the meantime, time to make hay for you guys. So appreciate the update. We'll stay in touch as things advance on the ground for you guys. And thank you for your time today.
All right, thank you. Appreciate it.